Hey, welcome everyone. Pat Mitchell here with Tricktrades, and in this video I'm going to show you how to execute two types of options trades: a high volume options contract and a lower volume options contract. So if this is something you're interested in, make sure to like, share, and subscribe and stick around. And if this isn't something you're interested in, well, beat it, nerd, because we got work to do. Let's hit these charts, folks. Let's rock and roll.
Okay, so now that we are into the charts, these are the entry charts on the two trades that I took. One on JD on the left and one on SPY on the right. Now, what I want to show you guys here is one's a long and one's a short. So JD was a long. Now you see a bunch of it looks almost random. Okay, now I explained this in chat and members are aware of how I trade. And one of the key factors to keep in mind that on lower volume options, if you have a big account, you can't simply just wait for the level, which was roughly down in this level where my cursor is. You can't wait for that because you will not get the size that you want. You can't simply just go in with 50 or 100 contracts and hit it. It won't allow you. You'll get probably really bad slippage, right? So although you see the entries, what you're not seeing is the size, and the size on the way down starts increasing. That's kind of factor number one. That's the difference between a stock like JD or options like JD and options like the SPY. Now, SPY is different in the respect that you can see I just waited for the level and continued to add in. Now, I wish that, let's say, let's take this and use this as an example. I hope you're following along here. Let's say this was the level I was waiting for on SPY. I could hit this right here, this one entry, with as much size as I want. You can see how many contracts are down here. This one volume bar is 750 contracts. I could literally hit this with 1,000 contracts and you wouldn't see very much slippage. And I wouldn't hit it with 1,000 contracts. That's obviously just like an extreme example, right? But JD, if you hit this with 1,000 contracts, you would have such extreme slippage, it would destroy you, okay? So this is the major key difference. Some of you are going to understand this and some of you aren't. Some of you are probably going to leave stupid fucking comments in the comment section saying, oh, well, you're just adding in and adding in until it bounces. No, what you're missing, because I've received comments like that before, and what you're missing and what you're dismissing is almost a decade of experience in the markets being successful, okay? Don't dismiss experience, folks. The ones that dismiss experience, you're not thinking. You're not thinking ahead and you're not seeing the bigger picture idea here. I trust my technical analysis. I have no problems, and I'm gonna go into the charts and the trades here. I have no problems averaging into whatever size I want, whether it be big or small, anywhere into that level. I have no problems, and once it starts to confirm, that's where I smack it. And that's where you can see where the size starts coming in. And a lot of this candle was a lot of my size here. My last entry, and then simply start paying myself on the push back into VWAP. At the end of the day, you can go back and you can review all of my trades on this channel. You can see this stuff works, guys. Again, for some of you that may not understand or may not get it, you're dismissing experience, and that's a big no-no. That's a big mistake on your end, okay? So that is a major key difference between lower volume options and then your higher volume options. Like on SPY, this gave me a beautiful opportunity to keep averaging in, and I'll show you on the charts here in a minute as to why. And then once it popped back up and slammed through that first initial area, I just waited for confirmation, hit it with size, and then start paying myself. Now I locked in about 3,200 bucks on the day. It's not a huge day, it's not a massive day, but a lot of that came from SPY, okay? Because on JD, I managed to pull about 665 bucks off of this trade. It's not a huge trade, but it was easy money. To me, this is easy money. I understand the chart, right? And then SPY, because I can hit it with such size, with confidence, because I trade this almost every day, as I'm sure you can see going back in a lot of my YouTube videos, like I trade the SPY options almost every day. It's pretty rare I don't take a trade on SPY, right? So I understand this. And that's, you know, as a little side note to this video lesson, folks, This is why you should focus on a small basket of stocks, because that's what gives you confidence. You'll get confidence in the trade when you start looking at the exact same stocks over and over and over again. You start to develop a relationship with them. So this was the level on JD that we were averaging into. There was a couple of levels, but I had no problems averaging into this. And even though it broke, it didn't break by that much, right? It's like 50 cents. Okay, my standard risk is a little bit wider than 50 or 60 cents. Now JD, because once it starts coming down, you have to understand these are not penny stocks. At some point they're going to bounce. There's no catalyst here, right? So that was JD coming into the level, and now I will just want to quickly show you SPY, because this was the trade here. You see how, although it's still kind of trending and still holding, I noticed a few things on the charts that I pointed out live on screen share, and then once it popped up, this is only due to short cover, because we were trading at all-time highs in and around. You're going to see action like this. And once this held, okay, this was the target, and this was a very clear defined target that I said live on screen share. Pay yourself into opening price. There you go. Boom. Where did it rebound from there? Right there. That's why we lock in our profits here, folks. We're not looking to get rich on every single trade, but I'll tell you what, almost a couple of points, 1.5 here on SPY, a beautiful trade on the options. What more does a guy want, right? Some people say, well, why didn't you take, because I've seen these stupid fucking questions too. Well, why didn't you take lows? Because guys, I'm only looking to trade the first hour and then get the fuck out. Like, I have so many hobbies and so many other interests that are outside of the market. I use day trading as a vehicle to make my living, right? But then it affords you the freedom to go chase your other hobbies, your other interests. Why the fuck do I want to stick around all goddamn day long to work some trade where I know I can make 1,000, 2,000, 3,000, 5,000, 10,000 on any given day, and then just walk away, lock in my money, and leave? So I'm going to leave it there. I'm going to wrap this up. I hope some of this, what I said, really sinks in, and I hope it resonates with you folks, because you do not need to trade all day long. If you do that, you are becoming a slave to the monitors. I made that mistake at the beginning of my trading career, guys. Don't make the same mistake. Make your money before lunchtime and get the fuck out, period. End of story. So I hope you enjoyed this. I hope you learned something. Make sure to like, share, and subscribe, and we'll check you on the next one, folks. Adios.